Hi there. In this study video, we're going to take a look at some of the reasons why the UK retailer Tesco makes consistently high profits. So why is Tesco so profitable? Well, Tesco was founded in 1919 by Jack Cohen, and it was a simple market stall in London. Indeed, it started as a single little store in Hackney, East London, but expanded obviously rapidly throughout the 20s, 30s, and again in the post-war period. Again in the 70s and 80s, and Tesco has risen to prominence as the largest food retailer in the UK. They had a 28% share of all UK retail grocery sales in 2022. Now, Tesco is not only dominating the grocery landscape in the UK, it also features in the ranking of the 20 most valuable retailers worldwide, which is some achievement. Profits, though, are not guaranteed. Take a look at this chart. They posted a £5 billion loss in 2014-2015 at a time when the business was going through a significant restructuring. But as you can see, since then, profits have gradually and impressively recovered and improved. And in 2021-2022, Tesco posted an operating profit in excess of £2.1 billion. Tesco is also one of the largest employers in the UK, with over 320,000 people working for them in 2022. Their headcount peaked in 2019, the year before the pandemic. And here's the pattern of Tesco's stores by type, ranging from convenience through to those large hypermarkets and supermarkets, One Stop, Booker and Jack's. Now, Jack's was interesting. That was a little attempt to create a discount store under a new label, Jack's, essentially to compete in certain areas of the country with Aldi and Lidl. But that came to an end in 2022 when they closed the remaining stores. So why is Tesco so profitable? Well, as always, a range of long-term business and economics factors are at work, and I've just picked out 3 or 4 of them for you. Economies of scale, diversified revenue streams, that's important, strong brand loyalty, and cost-cutting strategies. What about economies of scale? That is where, of course, a business scales up their production, becomes huge in the long term, and lots of factors at work there that help bring down the unit costs of production for Tesco as a food retailer. One obvious one is they buy in bulk. They have monopoly power when they're buying food supplies from food manufacturers, from farmers, from growers and other sources. Buying in bulk, or buying power, also called monopoly power, helps bring down their costs. They also have extremely sophisticated and scaled distribution and logistics operations, as you'd expect from a major national retailer. Advertising and marketing, also critical. Tesco's does spend about something like £3 million a week on marketing and advertising. Well, those are big costs, but of course they serve millions of customers. So the marketing costs per customer can come down quite sharply. And they have very, very strong IT and technology systems. Again, the big fixed costs of setting these up, the more customers they have, the more people using Tesco online, for example, the lower is the cost per user. That's an economy of scale. So economies of scale are really important for a business such as Tesco. And it's a great example to quote in an economics exam, for example. And they also have diversified revenue streams. Tesco Mobile, for example, launched in 2003. That was a joint venture between Tesco and O2. And Tesco's, along with other retailers, have pioneered and dabbled with the use of things like pharmacies and opticians in store, as well as things like cafes, to drive extra revenue. Tesco is also a business that has made significant acquisitions over the years. Again, these are long-term factors. They bought Farm Foods in 2011. Critically, in 2011, they bought out a business they'd taken a stake in, dunnhumby. Now, dunnhumby, very few people have heard of this, but it's really important to the Tesco story. dunnhumby is a customer data analytics business. And that's super important for their club card loyalty scheme, which has become so part of their business operations. You know, every time you buy something from a Tesco store, essentially you're sending information about your buying patterns, your behaviour, what you like to buy on a given day, in a given location, at a given price. So having a customer data analytics company as part of the business, backward vertical integration, has been significant. They tried to buy, well, they bought Giraffe, the restaurant coffee chain, in 2013, not totally successful. But a big important acquisition came in 2015 when Tesco acquired the wholesale cash and carry business Booker, which is a great example of backward vertical integration. And I think the key thing here is you want to be able to show an analysis diagram, don't you, showing profits. So Tesco has a downward sloping demand curve for its products overall. And of course, they can charge a price P1, well above unit cost C1, leading to high levels of profit. So Tesco is one of the most profitable retailers in the UK. It's a great example to use of the consequences of internal economies of scale, the growth of the business. The highly successful Clubcard loyalty scheme, used by something like 20 million customers, I think, overall, reinforces brand loyalty. Tesco now, when they offer a price discount on something, a bar of chocolate or some whatever it is, some cereal, all of their price discounts are offered 100% now to Clubcard holders. But Tesco is under pressure, competitive pressure from the likes of Aldi and Lidl, the deep discounters, who together now have, I think, 14, perhaps even more % of the UK retail sector. So opening more convenience stores, local stores, Tesco Express, I think looks like a smart move as people tend to move away from the big hypermarket experience. Here's the grocery market share in 2017. Tesco had 28%, Sainsbury's 17%, Asda, etc., Morrison's, Aldi and Lidl. Now, if we then look fast forward to 2022, right at the end, Tesco marginally down, still at 28%, percentage point difference a little bit there. Sainsbury's down, Asda down, Morrison's down, but look there, Aldi up from 6 to 9%, Lidl up from 5 to 7%. Indeed, Aldi and Lidl have overtaken the Co-op and Waitrose as the biggest in terms of the rank order. I think actually just recently Aldi overtook Morrison's to become the 4th biggest grocery retailer in the UK. So Tesco, great example of a business to think about as application if you get a question about the profitability of a business. Thanks for joining in. Take care. Stay happy. Stay curious. See you sometime soon.